NAB is predicting 18.5% house price growth. Let's have a look. Hello everyone, Florian.heise here, and welcome to another episode of HeiseSays. Grab your stein of coffee because, well, NAB is predicting, and we're not in my outro, I'm doing this so well organized here. We're at the intro, there we go, boom, professional. We may have had our first recession in 28 years, everyone. There may be half the population shut down. Unemployment was doing pretty good, actually, at the moment. We do have all this stimulus, though. Home builder driving up building approvals and pushing down the unemployment rate with this little thing of a huge amount of debt. But don't worry about that. No one cares about that between mates. And, of course, the NAB, well, 18.5% growth. Will Australia's lockdown slow house prices? And this article is written by Jessica Yuan on Yahoo Finance. So let's look at this one, guys, and then look at some of the data that NAB are talking about. If you were hoping house prices might come down as a result of the lockdowns engulfing half of Australia, don't hold your breath. NAB has predicted that property prices will rise to 18.5% in 2021, and this number isn't being scaled down in light of the lockdowns. Now, we'll have to see if the Sydney lockdowns continue. Now, I made a bit of a joke on my YouTube channel, and I'll bring this up. Okay, guys, now, I did a poll, and some people took it serious, which just shows you the issues with online communications. I did a poll, and I asked people, hang on, we'll scroll it down here. Here we go. If Sydney locks down until Christmas, how high do you think houses will surge? And I had 10%, 20%, 30%, 40%, and 50%. And one of the best comments here was, where is it? If I can find it, 9,000%. Let's keep going. Here you go. If you shut your economy down for 50% of the year, then a 50% rise in house prices. That's a 50% rise in house prices. That's economics 101, and I quite like that comment. Of course. Now, I was taking a joke, and some people took it seriously and got all offended. Guys, it's a joke. We need to have some humor still. But the thing is, because people are asking, where's the negatives? Where's the falls? Will it fall? How much has our government has now proven that they will intervene in the market? They will sacrifice the opportunities of future generations to just keep the status quo going. Now we see Labor's abandoned negative gearing, which has an impact on house prices. That policy's gone. Well, there you go. In terms of house prices, they held up pretty well through last year, and also even through some of the more recent lockdowns. So we haven't factored in a huge impact on prices, NAB senior economist Gareth Spence told Yahoo Finance. If we see some disruptions in the near term, next month or two, because of lockdowns, we remain optimistic they'll bounce back. Here's the question now. Housing is overvalued. It's much higher than wages. But is that what's driving up houses? How many people are investors getting into it? And how many incentives are the government creating to drive investment into housing? And the long-term issue is, why start a business? Why invest in? Why risk your money in starting a little coffee shop or something, or trying to employ people? Just put it in housing. The government will do everything they can to prop up housing. However, the Australian economy, more broadly, will certainly be impacted, with Treasurer Josh Frydenberg already predicting negative GDP growth in the September quarter before returning to growth in the December quarter. In turn, there may be some level of disruption across the housing market by way of lower overall listings and a longer time period that a property might spend on the market. But the impact of this disruption is expected to be very temporary. Until now, they've been snapped up quickly, said Spence. We're still optimistic on the price side. And here's a view from NAB Economics. Now remember when we started seeing predictions of a 40% correction, or modeling of the impact of a 40% decrease in housing coming from the RBA, and all the banks were predicting between 30, 15 to 5% corrections. Now 18.5. Capital City average, 18.5%. There you go. Where's Brisbane? There we go. 19.5 Brisbane, then Hobart. And then Sydney. Wow. So, though the COVID-19 pandemic has wreaked havoc on Australia's economy, well, no, the lockdowns implemented to attempt to stem the flow of COVID or the spread of COVID-19 has wreaked havoc on the economy. Remember that, everyone. This is being done with our intention to try and mitigate it. These are decisions done by our leaders and politicians. They're the ones that are causing these impacts. So the price that we're paying here has to be appreciated. So it's had the opposite effect on the national housing market, which recorded a stunning 13.5% growth in the 2020 financial year. Melbourne, which is set to emerge from its fifth lockdown midnight tonight, has been impacted the most by lockdowns, yet has still recorded a 10.7% house price growth so far this year. Australia's biggest city will have a similar narrative, said University of South Australia Professor Peter Kelizos. Sydney is now in the grip of a severe lockdown, so initially we should see property prices slow down, he told Yahoo Finance. But once the lockdown is over, prices will rebound. This occurred in every capital city we came out of lockdown last year. The same should occur here. Now here's a question I want to put to you. Now there have been concerns that housing is overvalued and there are issues with housing. Now there's also a discussion about inflation going around. People are worried about inflation. People are starting to see it. It's at 3.8%. I'll have to do a video on it. At least get it into my chart stack. But what do you think if Australians are worried about inflation and they want to secure their wealth? What are they going to invest in? Property is Aussie gold, everyone. I can't see the majority of Aussies going out to buy precious metals or to buy crypto. It's going to be houses. Houses will be what people will store their wealth in here in Australia. You can't argue with that. You know, that's our culture, guys. That is our culture. The real estate sector adapts to lockdowns. For some, the lockdowns will force some Australians to push out their plans to buy or sell a home. But property experts are also observing that the real estate market is getting better at adapting quickly to restrictions. We're finding that the property industry has become quite effective and operates even in lockdowns. The industry is still allowing people to inspect in a virtual way, conducting auctions online, said hotspotting.com.au managing director Terry Ryder. Auction rates only dropped slightly across Australia's capital cities last weekend, despite Sydney, Victoria and South Australia all in lockdown. It's just been a story of not only resilience, but you have to say defiance since the pandemic struck. Yeah, the Australian real estate industry is defiant. It'll keep going to the bloody end. The bounce back ahead. Once the lockdowns lift, we can expect the property market to roar back to life. What do you think, guys? If the housing market dipped early last year at the beginning of the pandemic, it was only because there was much more uncertainty about COVID-19 and how the economy would fare, said AMP Capital economist Shane Oliver. Well, also, we didn't realize the government will just plow so much money into the economy. We didn't realize that we would have the government and other organizations providing loan deferrals, everyone. It's not really the government providing this, but all the banks are providing loan deferrals, mortgage holidays. Who would have thought that would have existed? But mortgage repayment holidays served as a buffer, preventing thousands of mortgagees from defaulting. Well, also, I would think, hang on, what do we have here? We've also got loans and negative equity going down. You've got people with greater prepayments. You've got liquidity buffers in indebted homeowners, renters, and just outright homeowners. We're talking months here that people have set aside. So here's the thing. When you've got all these dire predictions coming from the media of, people in mortgage stress here and here, housing stress, and you know what, we'll bring up, bear with me, the definition of housing stress right here. Let's make sure we've got that selected on my definition tab. Hang on. Wait. Yep, good. We'll bring this up because this is important to draw to people's attention. That's equalized income, lateral surveillance, low income. There we go, housing stress. So housing stress is typically described as low-income households that spend more than 30% of their gross income on housing. Now, that's going to affect people more, but the big issue here is the real shocker is the difference in income levels for different people, everyone here. And I'll just bring this one up here. Let me get rid of that. There we go. This is showing you the difference between lowest, middle, and high income. Mean weekly by income group. So it's EDHI, and that is the equalized, where is it? Equalized disposable household income. The lowest is $433 a week. Top you're seeing over $2,000. This is the K-shaped recovery here, everyone, in Australia. This is why you've got some people that are protesting, that are struggling. Their jobs are gone, they're all destroyed. And this is why you've got others tutting them who haven't even experienced any of the impact of all this. Yeah. That's the way it is, guys. Anyway. And then house prices took off. Given that experience with the bank payment holidays back again, for those who need it, it's hard to see much of a fall, if any, said Oliver. Those keen to sell their homes are only delaying putting their homes on the market for a few weeks or months, he said. I suspect that once the lockdown is over, prices will keep rising, given still low mortgage rates, and the home buyer market will quickly go back to normal as restrictions around inspections and auctions are removed, just like we saw last year. House price growth to slow significantly in 2022. NAB's predictions for house price growth for next year is a fraction of what is predicted for this year, 3.6%. Given the speed of the rise, as we've seen in the year to date, I actually pulled back a little on next year's forecast for property, said Spence. They told the story that prices have been pretty strong. Activity has been pretty healthy, but part of that affordability aspect will start to bite. The impact of low interest rates will wear off. If we have a look here at the NAB property survey, we can see this is the view from property experts. Look at how high it is, everyone. So, there we go. What's the solution to all of this? If you're there hoping that this could be your opportunity to get into the market, you're sitting there waiting, trying to wait for a correction. Is it going to come? Is it possible? Will we see a correction? Or will the government, well, what ends do you think our government will go to ensure continuity and stability of the housing market? How much of our wealth as a nation, a significant amount, is tied up in housing? And how much will they step in to keep it going? Will Mortgage Keeper, the joke of the channel that I make, will that materialize? And how do we get off this addiction? Is it even possible for a generation or two, everyone? There's the question. As always, thanks for... I know it's not a solution. I know it's just a question. It's frustrating. Thanks for watching, everyone. Like, share, subscribe to the channel. Let me know your thoughts and opinions on this one in the comments down below. If you're a fan and enjoy the content I create here, there are a few ways you can support us. You can join us on YouTube or Patreon. You can sign up for SelfWealth or Stake. Use our affiliate links at Amazon, eBay, Independent Reserve, or AussieBroadband. You can buy merch from HeiseSays, use Gold Pass from the Perth Mint, or support us via PayPal. Take care, everyone, and I'll see you next time. Bye for now.